Chris Swift Trading into the mix here, and Jeff was telling us about the hurricane, potential hurricane. By the way, I know you're going to be driving through that, so good luck on that.
Thank you.
But the effect on that will be moisture on open cotton takes the quality grade down. It changes the color grade of that. So that obviously is a concern for the cotton market, maybe why the cotton market's trading higher, but we've got strength in the other markets.
Yeah, we've got there's quite a few things. There's one thing really nice about commodities. If you wait one day, it's going to change. And we now have some actual fundamentals that are changing. One, the hurricane coming in right when we're ready to harvest. So the beans, it's not going to help any kind of production as far as increase there, but it could start to scale back and make it a little bit more difficult to get into the fields. We saw China giving $1 trillion out there. So all of that is stimulus and has really started to make the markets move just a little bit, especially when we were looking at relatively bearish fundamentals. We had a large crop here in the U.S. It was drying down nicely. It looked like we were going to get it all in the bins. And then literally overnight, we get $1 trillion adjustment from China. We get a hurricane that comes in that's going to slow the harvest process down. And as you mentioned, the cotton, we're going to have a little bit of issues in the cotton. And the price has been reflecting that they've got some issues in it.
Okay, so we'll come back in just a moment and we'll get really into your wheelhouse as we talk livestock futures. Market Day Report continues in a moment. Welcome back to Market Day Report. Can we see cattle markets settle higher for 6 consecutive sessions? Well, let's start by looking at live cattle futures right now. Down 27 on the October at 182.97. December, a couple of pennies lower at 183.80. Now it's gone positive, up a nickel at 183.87. What about the feeders? 37 higher on the October at 244.85. What's pushing the cattle markets higher? We'll find out in just a moment. Hog trade. It's been higher as well and continues to move that direction. 82.32 on the October, a couple of pennies higher with December up 7. All right, so what's happening in the cattle market? Chris Swift is with Swift Trading. What's driving this?
Actually, there's nothing driving it. If you look at the cash markets, they're about as stable as we can be. We've been trading 182, 183 cash for quite a while. The boxes have been coming down. We're right at that $300 level now for boxes. And the feeder cattle index hadn't traded $4 in the last 3 weeks. It's just been completely back and forth and back and forth. What we've seen is enormous movement in the futures. We saw a $12, $13 drop in the futures market, creating a very positive basis that allowed some participants at that time, being the cattle feeder, to buy cattle cheaper out into the future. Same thing when we look at the fat cattle market. For weeks, we've not had an opportunity to sell cattle in the future at a higher price. The futures trader has come in and narrowed that basis spread to levels now to where if I need to hedge, I can hedge at the same levels as where cash are today. Now, I might not be able to participate in anything further than that, but at least I have locked in what the cash is currently trading at today.
So we mentioned earlier China pumping more money into their economy. We've seen that here in the U.S. Is there concern by pumping money into an economy that might be sputtering a bit? Do we have anything historically we can look back and say, well, this has worked, it hasn't worked, or are we in uncharted territory?
Well, I've talked about the uncharted territories for quite a while, and what I look at from that aspect is that whenever you give stimulus out there, people are going to use that. They're going to take that money and they're going to put it to work. That's the intent of it. Now, what we can't figure out, and we've listened to Scott talk about this a couple of times, was the move by the Fed, is that more inflationary, more stimulus to us, or is it really combating something that tells us how weak we are? And I think we're right in the middle of that. I'm not sure that another dose of inflation is going to help the cattle market. What it might do is hinder the consumer not being able to purchase that. So it's kind of right in the middle right now.